Good morning, everyone. You are watching a live daily market outlook for Friday, 1st of June, 2012, prepared by Windsor Brokers. I read some comments this morning and I like the word, despite being quite negative. A comment from one of the analysts saying the world is falling apart. Basically, the quite negative tone and outlook that persists in the past couple of weeks, months, whatever, keeps us quite worried about basically about the future of Eurozone, and as we are living in the Eurozone, and the possibilities of some disastrous scenarios that are quite high now make us feel worried as single currency continues to travel south with no any signal of reducing the speed, as also the fundamentals coming in quite negative figures. We are now wondering where is this going and what is the scenario for the future especially for the Eurozone. However, the other big economies are also hit, as China shows significant slowdown in its economy, and also there are signs of United States are losing steam in its recovery, as mixed data that came recently are actually still not giving us any stronger signs of stronger recovery actually of the US economy. From the other side, EU officials warn of Euro's survival now coming at a high risk with the slumping commodities due to global slowdown and the deepening of the crisis in Europe, triggering the red alert for all of us, and to see what is basically going on and what's going to happen and what will be the possible scenarios. If we take out the worst one that will show the break of the Eurozone as the bloc, as Greece is still quite close to it, despite some positive comments coming off the polls of the coming elections in Greece. But now the next patient that comes to the Eurozone heads, and especially the paymaster Germany, Spain is badly shaken with the current crisis, despite some comments from Euro officials that they said yesterday that they are not yet offering any bailout, and this that came actually yesterday were just rumors. Spain seems to be in even worse situation than Greece, despite also the Spanish officials during the past week denying any help from the Eurozone, at least regarding the classical bailout that was applied on Greece. As we are commenting this, the currencies continue, especially the euro and sterling, continue to trend lower, and sterling is hitting again fresh lows and fresh session lows, currently at 153.42, while the dollar continues to appreciate. Important things are also due to be released today, with a number of releases, PMIs actually very significant from Germany and the Eurozone, as well as UK, and of course the key release for today is the US NFP jobs data that are so far expected in quite optimistic levels, 150,000 compared to 115,000, and basically comments that I read this morning saying that only some disastrous results might obstruct the current strong trend of the US dollar, and as positive tone continues, especially in light of yesterday's release of ADP data that is one of the main indicators for the NFP data, although coming slightly below the expectations, but still showing a positive tone. We might see some expectations for a better result today of the non-farm payrolls compared to the previous week one. As said, commodities are slumping down as crude oil continues to travel lower, with this morning a crack of the yesterday's low at 85, now opening a way for a possible further extension lower, and seeing scenario for possible test of our next very strong level at around 75 zone. Still we are far from this, but current situation in the world and also then no support from the crisis with Iran, and as the negotiations with the UN did not give any firm results, weakening demand for the energies and the deepening crisis in Europe and worldwide, they keep the strong pressure on the energies. And similar situation is with the gold, that despite some significant recovery 2 days ago, as it bounced from its critical support zone of 1530 back to 1570, but again failed to make some more make some stronger movements for possible test of the next a strong barrier double top at 1583. Now is again under pressure, and again the risk is seen more towards the downside with again, to repeat, this critical 1530 1520 zone still vulnerable, and the possible break here is to open way for more significant losses. From today's calendar, we're going to take a look now. Important to mention the PMIs from Switzerland, Germany, Eurozone and UK are starting from 7:30 GMT, with Switzerland kicking at 7:30. Forecasts are more or less still negative. Swiss PMI is forecasted at 46.4, lower than the previous one at 46.9. Germany also 45 compared to 46.2. So all the economies so far are showing a further slowdown in the recovery. Eurozone as well is forecasted at 45 compared to 46. I do apologize. 46.2 was the previous one of the Germany, and the Eurozone was 46.9, while UK's manufacturing PMI due at 858 GMT expected at 49.8 compared to the 50.5 previous release, and this shows that all the PMIs are holding below the breakpoint at 50 that divides slowdown from the divides growth from the contraction, pardon. And the more negative outlook is seen on possible even weaker releases, as the forecasts are already negative. Further weakening in the PMIs for the Eurozone and the UK could be quite a negative signal, and might trigger some further weakness. Across the ocean, Canadian GDP due at 12:30. Monthly release shows a positive forecast for today, 0.4% compared to minus 0.2% of the fourth quarter of 2011, while quarterly one is expected again slightly higher at 1.9% compared to 1.8%. Key release today is, of course, U.S. non-farm payrolls due at 12:30. We already elaborated this. 150,000 is today's consensus compared to 115,000. As Windsor, we see it around 130 as the most realistic, and hope that it's not going to come below 115, or that will be quite a disastrous scenario for the US dollar. But based on some our analysis and the release of yesterday's ADP data, we see it around 130,000 in average compared to the other polls that are around 150,000 for today's release. Unemployment rate is expected to stay unchanged at 8.1%, along with average weekly earnings, hourly earnings, pardon, and the U.S. PCI price index that is due at the same time, as well as personal spending and personal income. Most of them are forecasted for no change today. U.S. Final manufacturing PMI for May is due at 12:58. Some slowdown is seen according to today's forecast at 53.9 compared to 54.8, while ISM manufacturing prices due at 1400 GMT are expected to come at 57.3 compared to 61. And finally, 1400 GMT is U.S. construction spending for April. Positive outlook for today, 0.4 is forecast compared to 0.1 of the March's release. Now we're going to take a look at the markets and see the latest movements in the major currencies and commodities, and of course expectations and the forecasts for today. As shown on the lower time frames, where in the hourly chart euros maintains a negative tone that is much better seen on the daily, where we have a steep downtrend from the recent the latest lower top of 132.82 posted on 1st of May, and basically during the month of May the euro has registered losses from 132.82, bottoming so far at just above 123 zone, keeping the very negative outlook. Yesterday's, overnight's low is at 123.22, last time seen in July 2012, and this marks approximately nearly 2 years fresh low for the euro, with the negative tone dominating on the lower and the larger time frames, keeping the pressure at the downside. A brief consolidation that followed the overnight and during the early hours of Europe has seen only 123.65. This is approximately the previous low of yesterday, and the 20 days exponential moving average on the hourly chart has so far capped the upside, as the pair dipped lower back to a few ticks above the previous low posted at during the Asian session, keeping the firm pressure at the downside for possible extension lower. On the downside, we need to open the larger chart to see 121.50 June 2010 low is next significant level, and acts as our next downside target ahead of more significant 120 zone and 118.75 June 2010 yearly low, all seen as short-term targets for the euro dollar, as negative tone keeps the strong pressure at the single currency against the greenback and keeping the focus at downside. On the upside, so far not much seen and not much to be expected. Is initial barrier at 123.65 so far capped the upside. Other barriers are at 124.00 as round figure resistance, and there is also 55 days exponential moving average, and the high of yesterday at 124.28. To improve the current negative tone and actually to provide near-term relief, we need to see a minimum regain of minimum 125 level. That will prevent immediate fears of further losses and allow for some stronger corrective action. However, a break above 126, 126.20 would signal some stronger recovery action and will ease the current bear pressure. Until then, still downside remains firmly in focus, and previously mentioned the levels would be our downside targets for now. We'll be closely following also the releases, especially from the Eurozone and the UK, today's PMI's data that will give some more clues. But according to expectations, not much to be seen in a positive on the positive side, and most likely further weakness would be the likely scenario for the single currency. Similar to this is the British pound, that also dipped to a fresh low this morning, actually just posted at 153.39 compared to 153.59 previous low. That was actually our next target on the downside, 154 and 153.60. that has already been cleared, now opening way towards 153.00 as round figure support, where we might see some profit taking and brief pause in the current strong downtrend ahead of the most significant level and our short-term target, 152.33, low of year 2012, posted on 13th of January. Despite studies on the daily chart being in extremely overextended levels, yet no any signal of recovery, and based on this, based on the outlook on the larger time frame, the likely scenario is revisit of yearly low at 152.33. That will also mark the full retracement of past 5 months rally from 152.33 to 163.00 high of 2012, posted on 30th of April. On the lower time frames, loss of momentum seen overnight and this morning has triggered the fresh weakness and the reversal of the brief consolidative corrective action of yesterday's fresh low at 153.59, with not much seen at the upside. 154.28 capped the upside, and the fresh weakness is now underway with the targets as mentioned previously, 153.00 and the main one at 152.33. As the pair continues to move lower, the initial resistance now stands at 154.28 ahead of yesterday's lower platform, pardon, at 154.60 zone, and more significant barriers are at 155.28, a break of which may provide some relief for the pair, and look for a stronger corrective action. Studies on the hourly chart are extremely extended into the negative territory, and this could be signal for some corrective action. The dollar against the yen also lost ground after a break below significant support at 79.00, previous low of 18th of May, after a recovery attempt failed at 80.13, and the subsequent weakness under the main bear trend line and below 79.00 cleared our next dynamic support, 78.60, the 200 days moving average, and so far tested the next support level at 78.3020 zone. This marks the this marks the top of the range of I do apologize, September-December 2011, before the pair dropped again down to 76, and the strong bounce higher followed. As the last quite strong support at 78.3020 zone has already been cracked, there is possibility of further extension of the broader downtrend as negative tone continues to dominate, and the possibility of full retracement of the 76.00 to 84.17 rally becomes quite high. Of course, the potential action of the Bank of Japan to prevent current strengthening of the Japanese currency remains on the table. As usual, they don't mention, they don't give any firm dates or anything. They just act. But already some hints have been mentioned by Bank of Japan officials that they are ready to act at any time and support their currency from further strengthening. So far, from the technical outlook, the negative tone continues to dominate. 79.00 now offers initial resistance along with the descending trend line of 84.08 from the upside to signal some stronger recovery and ease the current bear pressure. We need to see the regain of minimum 80.00, 80.13 previous high. That will prevent the pair of further easing. Until then, 78.00 and the possible extension to 76 with interim supports at 77.30 and 76.50 would be the likely scenario for the dollar yen. Dollar Swiss in a strong uptrend, clearance of first 97 barrier that also marked that marks the round figure resistance, and 150 days moving average seen on the weekly chart has so far extended gains to 97.43 with brief consolidation following the current strong action. Brief support was found above 97 zone at 97.10, where the hourly 20 days exponential moving average so far contained the current consolidation, with the bulls firmly in play and seeing potential for further extension higher. Break above 97.43 to open our next targets at 97.73 high of February 2011, and 98.00 as round figure resistance ahead of Fibonacci level at next round figure resistance at 99.00, and Fibonacci of the longer downtrend from 117.30 to 70.67 record low of dollar Swiss seen at 99.49. Back to the smaller picture, I said 97.10, 97.00 now offer initial support ahead of yesterday's higher low at 96.64, and the more significant 96 zone that also marks approximately 61.8% Fibonacci retracement of the up move from 95.27 to 97.43. It's better seen now, and basically it's expected, it's required actually to hold any more significant dips in order to keep the larger bullish picture intact for a possible extension higher. Only loss of 96.00 would delay immediate bulls and allow some stronger corrective action. As mentioned in the introduction, the yellow metal remains under pressure. Bounce of a critical support zone, the recent low at 15.32 posted 2 days ago, has found a quite tough resistance at 15.70 zone, where several attempts failed to break higher, and the yellow metal's price action actually was pressured by fresh weakening of the euro and the strength of the dollar that keeps the pressure towards the downside, and keeps the downside vulnerable for a possible retest of the critical 15.30-20 support zone. As the larger picture shows, the yellow metal in the firm downtrend, the most likely scenario would be the retest of 15.30, 15.20. These are the lows of September and December 2011, as well as a low of 13th of May, and recently levels past 2 weeks hit just above this level. And also this marks 100 days weekly moving average, quite a strong support zone that kept the downside protected for past 9 months or so, and a break below this level would be a signal for a more significant reversal of the yellow metal, as it passed 10 years a rally from the levels approximately $300 resulted in the hitting record highs close to $2,000 per ounce. 1,920 is the highest seen at September 2011. As a negative tone continues to dominate, more likely scenario would be further weakness, especially that today's quite positive expectations for NFP data from US are expected to further boost the greenback. Otherwise, a more negative tone for the dollar might see some a stronger recovery action for the yellow metal. We have next strong barriers at 15.70 zone, double top of past 3 days, and the next 1600 as our very strong and actually break point, where it's also 50% retracement. This is also the double top, and 50% retracement level would break here, and 61.8% to prevent further weakening and open way for some stronger corrective action for the gold. And finally, crude oil, that is also under heavy pressure, as shown on the weekly chart. It goes down from 110.53 yearly high of crude oil posted in end of February, that so far dipped to 85.83. And negative studies see potential for further extension lower, with overextended conditions showing yet any signal of a reversal. Our next target after losing the 61.8% retracement and the previous lows at looking for 85 zone as the previous lows, and next downside target, with the focus still at 74.94 October 2011 lows, as more negative tone continues to come from the world, leading world economies. This is what we are talking about, and the fears of lower demand for the energies keeps the heavy pressure on the oil's price, and the most likely scenario would be further extension lower. On the immediate outlook, currently testing the previous lows at 85 with some mild barriers seen at 87.30, and more significant at 88.25, close to it is 55 days descending moving average, and basically this zone around 88 is for now seen as capping any stronger corrective action. On the larger picture, strong barriers lie at 89.30, and only break above 92 would provide the short-term relief for the oil's price. I would like to thank you all for attending our live sessions. This was all for today. Some more analysis will be published on our YouTube website, YouTube page called Windsor Brokers Forex later in the day. Although also all of you that missed any part of the session, you can find recorded version that will be shortly uploaded into YouTube. Our page, again, to say, Windsor Brokers Forex. We'll be back at the beginning of next week on Monday at the same time, 7:00 GMT. Until then, I wish you a nice day, successful trading, and a good and relaxing weekend. Good luck.